Hey folks, Kevin here, January 7th, 2026. Quick YouTube here update. I'll send out my normal report, written report, probably tomorrow. I was hoping to do that today, but I'll figure we'll have to suffice with a video today, and then we'll kick out the main written report tomorrow. Things are starting off on a positive note. Start the year. We've got some things to talk about there, plus weather shift. Our early January U.S. weather shift is right on schedule. Just seems like most years we change right around between the 5th and the 12th of January. We go through a pretty major shift. It's just it's pretty clockwork. So the problem, if you live in the West at all, what we're running into is, the snowpack in the Cascades right now is 5% of normal. So 5%, and we're gonna boost that number a little bit this week. But after this week, we get into that shift. It's looking high and dry, warm and dry inversions. Pretty ugly for Oregon, Washington. Going to be no snowpack build for most of the month of January. Idaho, for that matter. And then if we go beyond that, the models are suggesting maybe this ridge that's building, it's going to be a big ridge. If that thing moves west, then we're going to get in the back door of that. We're going to get a big old Arctic push, and that's usually a dry pattern as well. And we'll have quite a bit of wheat at risk if that happens, especially as warm as it's been. So we got some concerns there. We'll just see how the models go, but we're certainly turning dry, and I don't like that at all, because we're off to a fantastic start. I mean, things look great. In most of the U.S. wheat belt looks great, but we'll see. We've got a lot of winter left to go. Things can shift a lot in February and March, but the bulk of January looks pretty negative for building any kind of water resources. So. It's been pretty good up till now, but moving on, the market text this morning, and I've kind of chatted about this quite a bit this last fall. It's like we're into that environment. It's not an exact environment as 2010, but it has some similarities. Money is looking for a home, and we've tracked that move in gold the last 2 years, suggesting that is forecasting something. Something is going on in the plumbing of the macros that's causing massive concern for everybody to move to gold. And silver took off. There's been a lot of speculation that the banks have held silver down for years. Just the short position in silver was just massive compared to how many actual ounces of silver were in existence. So that finally broke through. I had to get caught up with gold at some point. What's fascinating to me is I posted it was a wheat gold chart on how they had correlated over history. And it'd be interesting to post that again, but something broke in 2022. Something broke where that relationship completely ended. No longer any relationship whatsoever. Now I have my theories, which are probably close. I won't go through those today, but I've talked about them in depth before, in regards to wheat and the war and whatnot, because that's when the war started and that's when things changed. And so there's some of that I think has some validity, but we're getting to the point, especially with silver making its move, that there's a scramble for hard assets. People want assets. And, is what we found out with the gold and silver markets is if you don't have gold and silver, you can own paper, but it's not the same. You don't actually have it. And so when it comes to countries, it's more important than just individuals, because you can make money in the paper market individually, but as a country, if you don't have it, you don't have it. And so they were scrambling to get gold and silver, which is why we saw the cash premiums on those markets move up uh, above the paper futures market, the U.S. market, by quite a bit, significantly. You know, the Chinese silver market is and the Indian silver markets are way elevated compared to the futures markets in the U.S. So, like I say, if you don't own the silver, you don't own the silver. If you don't have it in your hand, you don't have it. And what we're seeing is a movement from that theory into the other commodities. And my positioning for the year was based on we could see this type of move happen in our grains, and it has nothing to do with how much grain's in the world. It has everything to do with how much money is on the sidelines getting ready to move in. Does that make sense? In 2010, we had so much more grain around than we have now, yet we were $9.50 wheat, we were $6 corn, or $5 to $6 corn. I mean, and there was so much more grain available then than there is now in the world. So, does it make sense to have $5 wheat and $4 corn? I don't think it does. So, as we go, and my positioning for the year to finish out the 25 crop and prepare for 26, these next couple weeks are extremely important to me. If the money's going to flow in, I expect to see moves exactly like we're seeing today, with, you know, corn up 3-4, wheat's up 8-9, soybeans are up double figures. That's what I expect to see if we're going to see money moving off the sidelines into these grain markets. So anyway, you're just going to have to be alert. If it fails here, if it finds out that money is not going to be coming into grains and not moving into the long side of other commodities, well, then I'm going to make some moves. Then I'm going to turn some bushels to cash, and we'll have some different positions then. But like I say, these first couple weeks of 26 are very important, because that's when the money's moving. We've got the index fund rebalancing starts tomorrow, and that's going to run for a week. And you're going to see some selling probably some selling in the gold silver markets, because they're going to be overvalued in those index baskets. But at the same time, you're going to see grains probably get buying because they're undervalued in these index baskets. Same with crude oil. It's going to be undervalued. So, come on, dogs, let's go. Sorry, I got to manage the dogs once in a while. So, you know, those index funds, those are the ones where you buy like a stock. You buy a basket, and that basket includes metals, it includes livestock, it includes grains, includes the soft commodities, includes energies. So that's how those are mostly designed. And there's some big news coming out Friday. That's going to be our tariff decision from the Supreme Court, whether those are constitutional or not. And there's speculation that if it is ruled that it is not constitutional for the president to impose the tariffs the way he has, then all of a sudden we've got to pay back a bunch of money to these countries who have paid those, or I don't know how that exactly works, but I would think that's water under the bridge. But the ending result could be a big, massive printing press. So we could see big pressure on the dollar if that happens. So right now the computer odds are saying it's 78% chance that the tariffs get removed. 22% says they're fine and justified. So we're going to find out what the Supreme Court says Friday. That's a big deal. USDA is going to launch some of their stuff here. I don't know exactly what day that report, I haven't checked, but when that comes out, that's going to be, you know, important on the corn yield side more than anything else. But we know the corn yield's too high in their books. How much are they going to adjust it? I don't know. So anyway, that's the gist of what I wanted to go over this morning. I'll write about those in depth tomorrow, hopefully, and we'll see. But yeah, weather looks, there's also some cold risks coming into the Black Sea. They're going to be on the edge of some really, really cold air. And if that happens, there's a pretty good swath that does not have snow cover. The main southern belt, where their best region is, they do have some snow cover. You get north of that in the central wheat belt, they don't. So they might get dinged a little bit there, but still too early to really care about that. Market's not going to care about that. So that's about all I've got. I'm forgetting something fairly important, but at least I touched on the money flow. Like I say, these next 10 days are crucial for how we're going to approach the marketing campaign for what's left of 25 crop, and then what kind of targets to put on 26. So, do expect, if we are seeing the influx of money coming in, do expect, your basis to deteriorate some on the cash side, but it will still, we'll still manage to go up half pace. And we get to that point where the psychology changes, the sentiment changes, then we can start doing some good. Then we can get lifted to a place that we want to be. And I haven't made enough phone calls. I know I get complaints that I haven't made enough phone calls, and I apologize for that. These markets, it gets you down in the dumps. They have for quite some time, and if I talk to 3 or 4 of you guys in the morning, and then you guys all ready to jump off a cliff, you make me ready to go jump off a cliff. And I don't know. We're going to get through this. We're getting closer. It's just one day in a row, and who knows? We're not that far off till we get it feels like the tide's turning already, and maybe has turned, but maybe we have to have some news to do it. But I feel like the macro thing is certainly in our favor for a change, and like I say, these next 10 days are important. That's all I got. We'll talk to you soon.